Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. Hope you're having a great day. Got a very important one here today. We're going to talk about a specific indication, a very larger time frame indicator, giving us some firm foundational values here for Bitcoin, but also more importantly, the macro structure and more so the weekly structure too. Just kind of looking at what happened the last 7 days and obviously the CME gaps here, Bitcoin dominance, and the whole 9 yards. So be sure to stick around. We got an important one today. Let's take a look. All right, folks, let's go ahead and jump right into the backend data here. We're going to waste no time this weekend. And don't forget to like the video, folks. Comment below if you get a chance and enable notifications so you're notified when these videos come out. With the order blocks, we've got a pretty significant order block at 108,000. Just want to touch on that, letting you know that that is a specific sell chunk, a sell wall there for us. So there's a decent chance that we do continue a little bit higher. That's going to probably provide an initial resistance. While that's just a small order block, that a lot of times support and resistance levels are synonymous with that. And we'll talk about 108K, what that level means for us. And just to touch on this here too with the macro structure, this is the weekly time frame, just kind of give you some perspective. We're still maintaining above our yearly volume weighted average price, which is kind of that indicator that I was talking about previously, giving us a good indication that we are pretty much on the right side of tracks here. But furthermore too, more importantly, we have a good amount of support below the price with our super trend, and obviously our 0.5 and 0.382 fib level between 100 and 106,000. So to me personally, when I look at the larger timeframes, it gives me some confidence here knowing that we've continued to maintain higher highs and higher lows in the larger timeframes for quite some time. While it could, of course, shift at some point, and even though we do have a local double top here as we did previous, the odds of us going below this previous low is very, very low. I feel like we are going to need to see some crazy stuff in the world to have that happen. So I wouldn't get too crazy down on yourself. I do think that 100,000 to 110,000 is our new range here for us, and I'll talk more so about why that is because there are a lot of confluence in these ranges. More specifically, 110,000 with that volume price more locally and larger timeframes, we're starting to see that area become a strong resistance potential for us. Right? Obviously, we could close above that in the weekly here, and it would be as if it never happened. But I think short term, this trend line that we're in right now, we need to recognize that we are in a position that we haven't established higher highs and higher lows yet. Okay, and that's on the smaller time frames, of course. Now, looking at the week, this is a 3-day time frame, just kind of giving us indication. Of course, we have shifted momentum. We've got a stochastic or a MACD divergence rather, just giving us the clear, transparent shift here, basically letting us know that we are in a downtrend, at least short term, right, for the last 10, 15 days worth of trading. But if we look in the previous time frame, in case you missed this from yesterday's analysis, when we have these channels that we work ourselves into below the center line here on the Gaussian channel, we can see that the price action maintains that level or that range for about 2 months, 1 to 2 months on average. And it has since legged up every single time. So with us breaking into that range, so to speak, we could be in a 1 or 2 month duration in this range here until the price breaks back out again. All right, obviously it could break down still too, don't get me wrong, but for the most part, those are really strong supporting factors to the downside. Now, looking at CME gaps, just to clarify, there are none for the moment, right? These little red lines here I have are just kind of the start of where the market closed on Friday, and it's still very early, but for the most part, majority of all the CME gaps or the CME closures on Friday were right there at the exact same place that we left off yesterday. Okay, so nothing super substantial there. I'll update you tomorrow if there's any significant deviations there, but just keep in mind, friendly advice, Ethereum does have a chunk down as low as 28 to 2,900, and then of course Bitcoin, the 92 to 93K range. All right, so there's still some smaller CME gaps there from the macro structure. Speaking of macro, if we look here, this is the daily time frame for the dominance, basically letting us know on the top right-hand corner that stablecoin dominance is effectively starting to plateau, which means that money is starting to be spent, essentially, coming away from stablecoin rather, and going into altcoins. It's not a heavy amount. This isn't very much at all, honestly, but it is still a green candle nonetheless. So that's positive. The reason why it is positive is because Bitcoin dominance is going sideways. Bitcoin is, for lack of better terms, bottoming out or just ranging. So when that happens, oftentimes you'll see altcoins start to absorb market dominance, and we can see Ethereum and altcoins alike are kind of taking some of that market cap away from stablecoin. That's usually a favorable sign, but once more, folks, it's kind of that buy the dip scenario. We dipped pretty hard. It takes a few days for things to level out. And I mentioned in my community too, hey, don't hesitate to just take a weekend off for a change. You know, you don't have to trade your life away in these situations here or try to force anything. And I know it's easy to want to force because you probably got hammered pretty hard on a trade recently, but the truth is you're better off not trading. That's kind of the concept, at least for a little while. I generally like to wait 24 to 48 hours after a pretty significant fundamental catalyst like we saw from yesterday. Now, touching on the daily time frame here, the outliers for liquidation is 108. That's no surprise. We already identified that in the order blocks. And then, of course, 106,000 as well. So respectively, we're right in the middle of that range. Daily time frame. Sorry, weekly time frame rather, last 7 days, we can see a larger imbalance there at about 109.3. So I do personally think we're going to slowly trend towards that 109, 110K range, and then potentially pull back from there. That's there's once more a lot of confluence at that $110,000 range. We'll talk about that here in a moment. Other than that, really just seeing 109K as that significantly larger area of liquidation to the upside. So shorts should be careful there. And this is just a quicker, easier way to identify that 106 and 108K large areas of liquidation. Okay, so it's easy to see that. Now we're going to just go ahead and jump right into the back end data here, kind of see what's going on with Bitcoin first, and then kind of go from there. So as we can see, we're in a super fearish type of market right now. This is generally where things start to pump. Now, it's not a guarantee, of course, but the last time we pulled back pretty hard, we rallied for a little while from what, that 110 to 116K range, right? And that reduced the fear, and the price came up, and then all these, this crazy tariff crap started happening with China, and then it goes back down again, war in Russia. There's all sorts of stupid stuff. So those things are factoring in here pretty heavily. But the foundation here is that you generally want to buy the fear and sell the greed. Okay, that's still the concept. That's the narrative you want to kind of keep in your mind. And, that's why I feel like it's important not to want to just sell everything right now. It's almost more appropriate to consider buying right now or averaging in. I don't think you should just buy everything, but you should slowly start to average in as the price continues lower until we find our bottom. Other than that, we can see the average top trader is essentially still heavy on shorts. So there's no doubt about that, but margin is decreasing, therefore reinforcing the potential for the weakness in those short sellers. Okay, we look here. This isn't really too telling, but it does tell us that retail has been pretty high on the buy orders as the price comes down. This is very standard, and as you can see, whales are starting to taper off and sell less there. And as you can see, they were more active when the price was higher. Right, that's typical for whales. They're going to be selling the top and buying the bottom, but they're not buying right now, so kind of tells us the bottom may not be in, right? So therefore reinforcing that 100,000 to 110K range that we may be in right now. All that being said, open interest doesn't tell us too much. Once more, 112 to 115,000 is that area there. Basically just letting us know that we have resistance above the price. We got liquidation short delta still quite high. This could imply a short squeeze in the near future, but it also just tells us that the bears are in control. Let's look at the last 7 days of liquidation here, just get a bit better of a perspective. I know we already kind of looked at this on the other chart, but a little easier to see here that we are closer to that little bit of liquidation above the price. So there's a kind of a spread there between 108 and 111. Okay, so that's above the price. So hypothetically, we go a bit higher before we go lower here. But once more, typical range-bound activity for a weekend post-Friday dump. This is a very common occurrence for anytime we see a dump on a Friday. Okay. So that's kind of where we're at there. This descending trend here is essentially just letting us know that we're still in this this bearish type of scenario, right? We are consistently establishing lower highs and lower lows. Until we hit higher highs and higher lows, there's no reason to get super excited. Even this little pump right here, I know we caught some longs in that point, got in, got out, but the truth is holding this to here just isn't a thing anymore, right? So if you're going to consider a long, secure some damn profit between now and 110,000 to make sure that you are on the safe side, right? That's the concept there. But no matter how you look at it, volume is tapering off, it's slowing down, it's a weekend. Really, the only opportunities you may want to find here today would be some outliers, some altcoins that may be outperforming versus Bitcoin, and you want to hold those on for a short period of time. The main concept here, though, is that you're going to find more success if you consider short selling than you are to take longs, just based on this downtrend. All right, so that's kind of the concept, but that's where we're at here for the most part. I don't need to dive into the daily time frame for Bitcoin. It's pretty bearish. A 4-hour time frame is also reflecting very similar. We have a weak MACD convergence here. Most coins are going to exude that same behavior, but it's not very strong, especially considering if you look at the lower local price action here. So this is pretty weak. And the truth is, you have to pretty much zoom into the hourly time frame frame just to be able to find any opportunities. And usually when you do that, you're stretching or reaching. So just be careful forcing a trade here. The bottom line is that there's not a lot of good opportunities this weekend, even though a lot of coins are just naturally perpetuating higher. I think that you can find some success there. We got to work within those resistances. Speaking of resistance, let's clarify this here too, and just to kind of give you some perspective. We have basically our local volume range here. As we kind of zoom into this local range, ever since we dumped on the Friday before last, basically 8 days ago, we can see the price action pulled back super hard. We got all sorts of alerts, and the average price right now is about 111,500. Okay, so we can see the most amount of volume in this current range at 111.5. If we add that and kind of compare that with our local bottom, the price action can try to bottom out. And then of course we got more fundamental catalysts here, right? Trump and the president of China going to bat at each other there. So all that stuff kind of occurred, right? But it averaged in specifically at this $110,000 range. So while I'm rounding down a little bit, it's more like 110.5 to 111.5. That range of 110,000 as a close approximate is probably going to work as a resistance. So just say we continue to progress higher here. Oh, great, we broke through our descending trend line. Everyone go long. And the price pulls right back down as soon as it hits that resistance range. So my money is on that being the new resistance range for us. And we're going to go ahead and kind of use that as the barometer there for us, right? That's the resistance range for us. Anyways, I'll go ahead and post this playout chart on our Twitter, Telegram, or Discord, but just be mindful if you do take longs, you want to keep them tight. You want to watch them close and make sure you're not getting too outrageous. I do think longs makes better sense this weekend from a very short-term perspective, but then of course the inverse as well. Perhaps a short once early market opens on Sunday or Monday as a potential reality for setting the tone for the week. But that's kind of where we're at there for the moment, and that's what my thoughts are for. If you're looking for a new exchange or possibly just want to help support the channel, Bitunix has got you covered. We've been partnered with this exchange for over 2 years. It's been our fan favorite for our community. And the reason why is because they take really good care of you. They offer trading reward bonuses as well as a reduction in fees. Best exchange I would recommend at this point. Link down below for more information. All right, folks, let's go and take a quick look here at Ethereum, kind of see what's going on and double check a few important factors. And just to clarify the obvious, the narrative is going to be the same here. Majority of all these coins are going to have descending trends that are working themselves into lower high, lower low patterns. And this is no different, right? So we are in a descending trend and we just got to respect that. But from a little bit larger perspective, though, this coin is honoring its lower trend line here, kind of letting us know that it refuses to establish tremendously lower lows, with the exception of this one outlier here. There's a great chance that we are reaching a bottom here for Ethereum in the relative near future, with this being kind of the previous range profile here, basically, right? So we got some decent volume here based on the previous range, and we're starting to see that hold for the moment. So pending Bitcoin doesn't dump on us, I think Ethereum has good propensity to progress higher. But let's go ahead and double check that to be safe, right? So we always want to do our due diligence here. Make sure we're not just abstractly jumping in blind. Speaking of blind here, open interest does help tell us a lot about resistance and support ranges. Once more, I've talked about this previously. 3,900 is that current open interest range, and then respectively 3,970. So the 3,900 to $4,000 range is kind of that resistance range for us. Now that we lost that as support, right? And that all happened because of a fundamental catalyst. Kaboom! That big old chunk, that dunk overnight from a couple nights ago. So all that said, liquidation short delta is about 8 billion. That's just letting us know bears are in control. If we look at the last 7 days, not a whole heck of a lot to tell us. We probably have to zoom in a little bit further to kind of identify some key levels. And if we look at the last 3 days worth of trading, we can see there is a decent chunk above the price, somewhere in the range of 39.30 to 4,200. Okay, so there's open interest above the price and also liquidation. Okay, that does tell us in a lot of ways that the price is more likely to retest those ranges based on the simple fact that there is, a lot of incentive to push the price action higher because whales love to manipulate the price. So there's a good chance that we do see something along those lines. Now, when we look at the daily time frame, it's going to be the same narrative on pretty much all altcoins. We'll touch on it, but it's nothing super outrageous. We're starting to see a secondary potential swing to the upside for stochastic. So as we continue to bottom out in this range, the longer we spend in this range, the more likely we are to swing higher. We also see we're under 50 in the RSI. That's usually something I don't really see as a favorable sign on the macro. And then we look at the 4 hour, pretty much the same darn thing, right? We're under all moving averages. We are essentially establishing lower highs and lower lows. Money flow index is low. MACD is converging. That's really one of the only outliers here. So for the truth is, while the MACDs are converging on lower time frames for most altcoins, there's that natural, just little, that knee-jerk reaction to the price pulling back. So I wouldn't be super thrilled about the price continuing much higher here because most signs point down. So the logical place to me that seems like very good consideration for a short is just that psychological resistance at 4,000. That level has held pretty well as a support and resistance in the relative recent past on larger time frames. Keep in mind, smaller time frames, you'll see some deviations there. But if we do look at this, liquidation, there's liquidation upwards of 4,100. So if we do surpass 4,000, close above it, that would probably be the next target. But you can see here, of course, all that volume here locally at about 4,130. So when you kind of zoom out, there's more resistance above the price than below the price. But we are reaching this overextended descending trend line state, and there's a good chance that we're going to squeeze and break out here soon. So I do feel like Ethereum on the short term is more likely to hit that 4,000, 4,100, but I do also think that we're going to find a lot of resistance in those ranges once we get there. So we want to kind of take it day by day. Those are my thoughts there. What are yours? Comment below. Quick heads up to our traders, make sure you take full advantage of this Uptober sale here, or rephrase to as our Dumptober sale. Sale ends October 31st. Just want to make sure you're aware there's only a few slots left remaining for our permanent access, and there's also monthly options as well. CryptoCache Premium, day trades, swing trades, and trade setups are all included here, and those are provided to you through Telegram or Discord. Feel free to message me below if you have any questions, of course, but I do recommend you direct message me before so we can make sure that you have any questions, we field that together. All right, let's take a look here at Solana. What's going on here? Well, back in for Solana is pretty straightforward. We haven't really seen too much deviation here. That $198 to $200 resistance range is still, holding strong, or hasn't even been retested. But for the most part, we can presume that will be the resistance range for us. We can see liquidation short delta is still quite high. No real liquidation on the larger time frame. So anything last 7 days for most altcoins has just been completely wiped out. The only thing we can really look at is smaller time frames like the 3-day, because that tells us what people have been doing over the last 24 to 48 hours. And in this case here, there's a lot of liquidation at 188 to 195, respectively 200, but decent amount below too. So that 180 could be potentially one of the next hits there. Now let's take a look at the charts here and kind of see. I like to look at side by side. I forgot to do this with ETH, but let's do it with Solana here. We can kind of see a double bottom for Solana, where you certainly don't see that for Bitcoin. Okay, and this to me shows a lot of strength in altcoins. So this is another reason why I feel like altcoins are still in pretty good shape, because Bitcoin had its low, its support at 110,000, it rallied back a little bit. Solana had its support at 178, basically 180, rallied back quite a lot. While it did pull back a lot, it's pulling back to that same area and pivoted and held that range. So that does reinforce support in the 180s, so to speak here, and I think we're still in pretty decent shape here for Solana to progress higher. Just in the overall sense, but once more, higher doesn't mean 300. Higher means we're probably going to hit our local resistances and potentially reject off that. So to kind of clarify what that looks like, our previous low that hasn't been really much retested as a new high at 192, and then we also got 203. Okay, 203 is like that big number we've always seen here for Solana. So 203 and 192, those are kind of like the two targets, I would say. So if you're going to play a tight long, 192 would probably be a realistic profit target. And then a secondary one consideration is roughly that 200 to 203 range. But there's not much here on the 4-hour time frame that's telling us that we're in great shape. We're going to see a lot of MACD convergences here, which we are seeing here so far. But that, a MACD convergence into a descending trend line doesn't really do too much. At least it's a significant false positive. It's basically a dead cat bounce, just letting us know that we're more likely to travel lower. So if you're going to take a long on this coin, just take it long with respect, right? Tight margins, watch it close. Don't let it ride to that 300 plus range, because God only knows how long we have to wait to see that again, or ever rather. Okay, so let's double check SUI next and kind of see what's going on. Now with SUI, this one is not looking great. I've talked about this previously, and the reason why is just simply put, unlike Solana that pivoted and bounced off its local low, SUI lost its local low. So 245 is that kind of macro support. We're trending right there in that range right now, which is all well and good, but kind of coming below that range doesn't really give me a lot of confidence here to want to trade this coin. Once more, I've been wrong in the past. I totally get it, right? So anyways, When we look at open interest, 270, 280, that's nothing really super substantial. It's far away, but those are areas of potential resistance. We also have 200 as a liquidation delta, 200 million to the downside. All these coins we're going to look at are going to have more shorts than longs in play. Okay, and that's just kind of the common narrative. So I probably sound like a broken record, but it's important for you to recognize that the trend right now is down. All right. So by no means am I ever trying to convince you to go against the trend. You always trade with the trend. Okay. Now there is liquidation at 250 to 260 here locally, so that could be the next stop for this coin. We look at the 4-hour time frame. There's nothing here outside of, once again, the MACD convergence telling us you should take a long. The thing to identify is that we have our local resistance at 270. This is confluent with our open interest range too. So we got a lot of open interest and volume resistance at 270. So hypothetically, you take a long, you better dang well secure profits between now and 270, because it's outrageous if you were to try to hold too much longer than that, mainly because it's just too much risk to hold a trade for that long right now. That's kind of the concept. As you can see in the last 8 days of trading, we've seen 2 significant wipes, a lot of liquidation getting hit, and it's completely unnecessary. You should never get liquidated on a trade. You should always have a stop loss in place. All right, that's my thoughts on SUI. What are yours? Let me know. Quick heads up to our traders, make sure you take full advantage of our Dumptober sale going on until the end of the month. We have a few slots left remaining. Our most popular feature here is our permanent access. Make sure you take advantage of this, of course, if you want monthly subscriptions as well. That's also a good feature for you. But the main concept here is that you're provided with swing trades, day trades, and my trade setups to let you know specifically why I take the trades that I take in the first place. Everything is explained, as well as a trading university too. Be sure to check it out. If you have any questions, comment below, or more importantly, just reach out to me direct with the contact information in the comments. Okay, XRP. Very similar scenario here to SUI. We could pretty much just copy and paste and say the same thing, at least as far as the chart is concerned. Almost the exact same thing. We got our point of control at 235 while we're trending above that or at that level versus being under that for SUI. The same thing comes into play here. Our previous low was broken, and we're establishing lower highs and lower lows more significantly than other altcoins. So that doesn't really give me a lot of a high vote of confidence for XRP. If we take a look at 233, that's our point of control, but also our area of open interest. So there is a chance that this level of 233 will hold. Okay. Now, all that being said, we still see about 800 million in short liquidation delta. That's a lot for this coin to the downside, implying that you're taking along right now is kind of crazy. And if we take a look here at the back end, there's a lot of liquidation above the price, though. That's how many short sellers are in this coin right now. So 240 and 248 are those 2 areas of liquidation. So just some places to be mindful of, but there's really no reason to go into great detail on this coin. Try to waste your time on a super big analysis for it. The truth is there's a lot of resistance above 240. 255, 270, 275. There's a lot of little areas that I can probably clean up on the charts, make it a little more transparent for you. But taking along into all that just doesn't make a ton of sense. At some point, we're going to want to take along. Don't get wrong, but we have to wait for these descending trends and these, Bitcoin to successfully remove its head from its ass first. And until that happens, XRP is going to continue to struggle. No matter how many moon boys you watch about this coin, it's going to be the same narrative, the same thing over and over again. It's pretty synonymous with Bitcoin. It's ripping to the downside with Bitcoin, and it's only half X of Bitcoin to the upside. It's not really a great investment at this point. Now, long-term picture, spot bag, totally different story. Okay, I'm not telling you not to invest in your spot bag. You probably should continue to average in, because I'm sure you're probably averaged in much higher than now based on a lot of quote unquote experts telling you to buy. So just, friendly advice, now's a great time to average into your position for a spot bag perspective from all altcoins. But I think liquidation and leverage trades, if you're going to trade with the potential of any liquidation, you should be very careful and maybe take a weekend off in that regard. That's the concept. Cool. Anyways, I hope that made sense and I described it correctly. Thanks again for being a phenomenal part of my life. And why don't you comment below, let me know how long you've been watching for. I'd love to hear it. Have a good rest of your day. We'll see you in the next one. Take care.